Hey guys, how's everyone doing today? Today we will be talking about the Bank of Japan as well as the RBA. If you see here, we had some interesting moves. So we had some interesting moves happening on USDJPY after we had the highest CPI for Japan. After we had the highest CPI for Japan and the worst GDP for US, we had a decline of over 2.8%. So that's 4,000 points, 400 pips. And then after that, we just had a pretty much 70-80% of that recovered. So 2.60% right now, ranging since 12th of March. So pretty crazy how the things can work out in 7 days. As well as on Aussie dollar, we are falling hard here since the RBA paused the rates again. Widely expected, we felt 0.8% lower, so 500 points, 50 pips. But it's not because of the rates decision, but yes, as the monetary policy statement. So we're going to be looking at that today. All right, guys, we're back. Let's start it. Otherwise, it's going to get too late, and we do have lots and lots of topics to cover today. First of all, let's have a look on. Let's just start it with the simple one first. Let's start it with the simple one. Speak Spanish. Mi hermano, and a little Portuguese. That's awesome, man. What a legend. What a legend you are. Fantastic. Why JPY is falling? We're going to be touching that right in a second. But first, let's just start with the easiest one. That is the RBA interest rates decision. Oopsie, sorry. As we can see here, right? Let me just grab here. So just a second. Calendar. So if we look at today, we have the Australian RBA interest rate decision plus the Australian RBA press conference. Now, I don't know how many times I've explained it to you guys already that this is not mattering much as this guy here, the press conference. Okay, they are both important. All right, they have 1 hour of difference. So the interest rates decision is done at 2:30, and then they have to do all the paperwork, and then the press conference is released at 3:30. All right. So if you guys pay attention here, the market have been priced in 4.35%. Well, basically no changes, long time already. And it has been for the previous. Actually, on FinLogix, you can click on it and you can see the past data. So just in a second, it's loading. There we go. So they have been holding since November. Sorry, not November. Yeah, November, sorry, yeah. 7th of November last year. So 1, 2, 3, 4 pauses. And then they had, before that, they had 1, 2, 3, 4, 5 pauses, and then after that they had some hikes. Before that they had some hikes. So pretty much, let's say 9 pauses and 1 hike in a period of 10 months. So when we look to, you know, 3 quarters, pretty much 3 quarters, we had only pauses and only 1 hike. So majority speaking, pauses are dominating the market. So as an analyst, you come here, you look at these and you think, okay, so they are pretty decided that they will keep pausing. But I've mentioned already that the important part of it, it's not the rate decision. It's actually the rate statement. So this is exactly what we're going to be looking at today. So to get access to those, you know, central banks statements and so on, it's very easy. You don't have to go everywhere. You only go and write whatever. Let's say you want the Bank of Canada, BOC, and then you put statement. Or if you want RBA, as we're doing today, you just write RBA rate statement, and then you click enter. And that's going to be always the first link because it's the most reliable source. Of course, is the Reserve Bank of Australia. As you can see, Reserve Bank of Australia. You click on it, you're going to be redirected to the page of the monetary policy decisions of the board in 2024. And right there, we're going to have the first one that was on the February 6th, and then March 19, that was today. So the one that we want to look at, it's the 20th March 2024. And there you have it. All right, so what's the rate statement? What's the statement basically is? Well, the statement basically is a rewording version of what just happened on the meeting, right? Because when we have the rate decision, we have a meeting, with all the chairmans, trying to decide either they want to hike or they want to pause or they're going to cut. And that generates discussions, therefore, all the discussion is summarized and put it into the statement of why they've done this decision of hiking, pausing, or cutting. All right. So let's just have a look at it and read it through pretty quick because I don't want to spend too much time on it. I want to invest more time into the Japanese yen because that's the big boy that is happening right now. So when we look at, where is this? There we go. When we look here, as it's meeting today, the board decided to leave the cash rate target and change it at 4.35%, and the interest rate paid on exchange settlement balances unchanged at 4.25%. No changes, no surprises. Now, going for the inflation, inflation continues to moderate but remains high. Of course, it does remain high because the RBA has a inflation target of 1 to 2%. All right, so whatever it's up that, they will say that it's higher. So recent information suggests that inflation continues to moderate. That's true because we came in 2023, all right, January 2023, we had inflation in Australia at somewhere between 8%. And right now, 2024, where we are now in March, we have inflation of half of that. So let's call it 4%. All right. So basically, we've decreased 50% of inflation. The RBA have done the job of hiking the rates into sufficient levels that it is right now, 4.25 and 4.35% in the interest rates and the settlement, exchange settlement balances. And they were capable to reduce 50% of the nominal inflation. When we look to these, it is good. You came in from 8 to 4. That's fantastic. But we do have another 50% to take off from those 4%. So we need to come down to 2%, at least 2%. Decent would be 1.2, 1.1. All right, 1.1. 1.2. That would be the goal until the end of this year. But we know that it's not that easy. Otherwise, we would be there already, right? So it takes time. It takes time, and they are predicting to have inflation under control in 2025, first quarter, coming down to 3% at Q4 of 2024, all right? So just, again, those numbers. 2024 Q4, they would be looking to 3% on inflation, on nominal interest, on nominal inflation, CPI basically. And the first quarter of 2025, next year, we would be looking to a controlled inflation. Okay. So there's lots of things to happen yet. There's plenty of things to happen outside of RBA control, as well as dynamic changes on the world imports and exports, gold prices, coal prices, oil prices, and so on. So they can't only rely on what they have on their models, because every central bank has different models to operate. Therefore, it's pretty tough times for them. All right. So let's go on. What are they looking here? So recent information suggests inflation continues to moderate in line with RBA's latest forecast. The headline monthly CPI indicator was steady at 3.4% over the year to January, with momentum easing over recent months. Driving by moderating goods inflation, services inflation remains elevated, and it's moderating at a more gradual pace. The data are consistent with continuing excess demand in the economy and strong domestic cost pressures, both for labor and non-labor inputs. Higher interest rates are working to establish a more sustainable balance between aggregate demand and supply in the economy. So that's really good. That's what we want to see. They're putting higher rates and they're actually making an effect into the economy. Accordingly, conditions in the labor market continues to ease gradually. Although they remain tighter than it's consistent with sustained full employment and inflation at target. Wages growth picked up a little further in December quarter, but appears to have picked it with indications it will moderate over the year ahead. Okay, so that's interesting. So they say that wages, so basically, society salary growth picked it up a little further in the December quarter. Okay, but appears to have picked with indications it will moderate over the year ahead. Okay. Nevertheless, this level of wages growth remains consistent with the inflation target only on the assumption that productivity growth increase around its long-run average. Inflation is still waiting on people's real incomes, and household consumption growth is weak as the willing investments. Now, pretty much what we see here is that they've done a rundown into the economy. Some parts of the economy are looking healthy, some parts are not looking too good, but they are already expecting for those some parts are not looking too good to actually come in handy, right? So now, the look remains very highly uncertain. So let's have a look on here. Let me highlight it. Okay, so I want to take these. Okay, there we go. While there are encouraging signs that inflation is moderating, the economic outlook remains uncertain. The December quarter national accounts data confirming growth has slowed. As we saw, yes, we did have a GDP and it was much lower. It was lower than expected, all right? Let me sip some water here, guys. Right. Household consumption growth remains particularly weak amid high inflation and the rise in interest rates. After recent declines, real incomes have stabilized and are expected to grow from here, which is expected to support growth in consumption later in the year. Meanwhile, growth in the unit labor cost remains very high. It has begun to moderate slightly as measured productivity growth has picked up in the past 2 quarters, but whether this trend will be sustained is uncertain. So what are they saying here is that they don't know what's going to happen. All right, that's pretty much bringing to a simple and like everyday use English. They don't know what's going on. They don't know what's going to happen. They don't know anything. It's all uncertain. And you can see that throughout these monetary policy statement, most of the words are using uncertain, data dependent, have to wait. So it just shows investors that are looking and willing to put money into Australia that even the RBA don't know what's going on here. So that's not good, right? So let's say I'm a fund manager. You come to me and say, look, what's your returns? Show me that you are actually giving returns. Show me that, what's your drawdown expectancy, what's your Kelly score, what's your beta, what's your alpha, your 2 Greeks, and so on. And I look to you and say, mate, uncertain. I don't know. It can be good, can be bad. It just depends. Like it's, I don't know. Would you put money on my hands? Of course not. If you, if I come to you on this approach, telling you that I don't know what's going on my fund structure, mate, that's an alert. That's not good. Definitely not good. Okay. So when investors look to it, the central bank saying that they don't know the projections, they don't know what's going on. That doesn't look any good. The central forecasts are for inflation to return to target range of 2 to 3% in 2025, as I've just mentioned, and to the midpoint in 2026. Services price inflation is expected to decline gradually as demand moderates and growth in labor and non-labor costs eases. Employment is expected to continue to grow moderately, and the unemployment rate and the broader underutilization rate are expected to increase a bit further. While there have been favorable signs on good price inflation abroad, services price inflation has remained persistent, and the same could occur in Australia. There also remains a high level of uncertainty around the outlook for the Chinese economy and the implications of the conflicts in Ukraine and the Middle East. Domestically, there are uncertainties regarding the lags in the effect of monetary policy and how firms' pricing decisions and wages will respond to slower growth in the economy at a time of excess demand. And while the labor market remains tight, the outlook for household consumption also remains uncertain. It's just everything is uncertain. Look, let's just take this paragraph here as example, right? There also remains high uncertainty around the outlook of Chinese economy and conflicts in Ukraine and Middle East. Domestically, as uncertainties regarding the lags in the effect monetary policy price and the situation like growth and economic excess demand, and why the outlook for household remains uncertain. Now you tell me, is it good? It's not good. It's really not good, right? It's really not good, and we can see when not a problem. You can see how the Australian dollar just reacted, right? Now, going for the last paragraph and one of the most important ones, and this is most of the times when the central banks give you, what they are willing to do and what are their next steps and so on. We're going to read through it now, but you will be able to see that feels like they don't know what are they doing, and that's pretty scary. Okay, so of course, returning inflation to target is the priority. It has been since starting to hike the rates. So returning inflation to target within a reasonable time frame remains the board highest priority. This is consistent with the RBA's mandate for price stability and full employment. The board needs to be confident that inflation is moving sustainable towards the target range. To date, medium-term inflation expectations have been consistent with the inflation target, and it's important that it remains the case. Not too sure about that. While recent data indicate that inflation is easing, it remains high. The board expects that it will be some time yet before inflation is sustainable in the target range. The path of interest rates that will best ensure that inflation returns to target is a reasonable time frame remains uncertain. What? Remains uncertain. They don't know what they're doing with the interest rates. And the board is not ruling anything in or anything out. Guys, can you believe on that? The board will rely upon the data and the involving assessment of risks. The board will continue to pay close attention to developments in the global economy, trends in domestic demand, and the outlook for inflation and the labor market. The board remains resolute in determination to return inflation to target. Wow. 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 It's just anyone get for this? Anyone get how this is bad? Can you guys feel how they don't even know what they're doing? Just let me know. Like, wow. Okay. Apart from that, let's have a look now on Aussie dollar. Okay. We had the RBA rate decision at 2:30. Sorry, 2 o'clock. So right here. So where's my pen? So this move basically here was the RBA rate decision and rate statement. Okay. not looking good for Australian dollar. Okay, not looking good for Australian dollar. Let me clear this out. I've been a shorter since here. Okay, so I got all of these move, and I'm getting all of these move, and I will continue to hold this short, just because it doesn't make any sense for you to, in a fundamental perspective way, to go against the fundamental reason. Okay, so the fundamental reason is saying you something and you go against it, it's not gonna be good. Right, so that's pretty much all I have to talk of the RBA. Do you guys have any questions standing for this topic, or I can move ahead for the Bank of Japan? No. Okay, cool. Now, before we move to Bank of Japan, let me just address this move that is happening right now on Europe. Okay. When we see, where's my pen here? When we see this move happening, I've mentioned that so many times. So many times. It's just, I'm getting tired of it. Like, seriously, I'm getting tired of it. Sorry. Let's go again. A box. See the box here? Fundamental reasons are cooking. Okay. ECB rate, hawkish Lagarde. Okay, cool. NFP high, unemployment lower, average hourly lower. US CPI higher. US PPI higher, US retail sales lower. And then we come with euro inflation as expected but declining. Okay. Pretty much we see that euro is not doing pretty good, and we see that US is still standing. Still standing. Ooh, there's a music like that, but anyways. And then there's another box here. So one position here, another position here, and I'm still holding it. Okay. Until 108. So I thought it would come to 110 first, but it didn't. But that's all right, because we were having some good euro strength. But then out of nowhere, we came in with some good strength for the US. It's just working pretty good for the US dollar right now. Even though yesterday I was working on it, like if we have a look at here, pretty quick. That was yesterday to today. Here. So when we look to here, euro inflation rate year over year, that was very important. We look to it and we see 2.8 from previous, 2.6 forecasted as expected forecasted. Even though we had as forecasted, if we look to euro ECB inflation, if we come to here, inflation on the actual ECB, European Central Bank, where is this? It's not what I want. Ooh. Oh, my computer it's not working. Okay, there we go. So if we look at the inflation, so this is from ECB, okay, from actual ECB. So euro area is 2.6%. The lowest is Latvia with 0.6%, and the highest is Croatia with 4.8%. So we can, it's a lot of data. We can see here on the map, all right, Croatian being higher with 4.8% down here, and Latvia being lower with 0.6 right here. Okay, we can see that the overall index has coming down a bit, but alcohol and tobacco continue to be high. Communication very low. Restaurants and hotels, so that means outside food, still very expensive. All right, so the most expensive ones, top three, would be alcohol and tobacco, and then we have restaurants and hotels. We have miscellaneous, but we're not going to count, and then education, and then recreation, culture, very close with health. So things are going down on Europe, but not looking that great at the moment as well. But look, we came from the peak of 10.6% annual inflation, guys. So we've declined more than 80% of that already. We need to come back to 1%. All right, so just making sure everyone knows. So inflation is reducing, so therefore euro is losing its strength. US has a high inflation, therefore US is still gaining some of its strength there. Okay. Now that's all my take on euro dollar. Now let's move on to USDJPY. Right here we had, where's my pen again? Right here we had the decision. Okay, right here. First of all, we had the decision to be done at 2:30 p.m. in Australia time. Sorry. Supposed to be done 2:30 in Australia time, but it wasn't. Okay, because from Japan, you can expect it unexpected and you can expect it at all. All right. That's a nice thing that I've came up with. Expect everything, don't expect anything, and expect it all. All right. So basically, be ready. 2:30, nothing came in. I was like, oh, okay, interesting. So you can see here that this is 2:30. Sorry, this is 2, nothing came in. Oh, this is what? Oh yeah, that's correct. 1 o'clock, sorry. 1 o'clock, nothing came in, and then 2 o'clock, they actually came in and addressed that, yes, Bank of Japan is out of the negative interest rates policy. Can you guys believe on that? But we can see something. I don't know if you guys know about Nikkei leaks. If you know about Nikkei leaks, is a website from Japan, and all of this was pretty much in line with what leaked in the recent reports of the national media. That's the Nikkei leaks during last week and yesterday afternoon as well. So the USDJPY rose with the decision within expectations, right? Removing the last hope of a pullback for everyone. So it was pretty weird because they did actually raise interest rates. We didn't have a positive effect because the news was Nikkei Leaks is a very, very good website from Japan. And they published it that the Japan will raise interest rates. And when they did that, well, that's not good because now we have a leak. So a sort of insider information. And in a sense, that's exactly what they did. Okay. Now, I have some things I want to show you guys here first. So let me share this. Just a second. I think I will download this image. It's better. Where is it? Download. There we go. And then I can put this on here. Where is it? There you go. It's just loading. Okay. So that's the target policy interest rates for Japan. Okay. And look at that. They have been negative since 2007. All right. So 2009, they have been negative since then. So the Bank of Japan, they ended the NIRP. That's basically it stands for the negative interest rates policy, and they raised the rates for the first time since 2007, as we can see on the charts, to 0% from negative 0.10%. So this uptick here, oh, that's bright. So this uptick here was from negative 0.10% to 0%. Right? What does the negative interest rates actually mean? It means that is negative rates. So basically, if you're getting money, so getting money from banks, it's pretty expensive sometimes as the interest rates are high, right? We have interest rates right now in Australia at 4.35%. So that means if you're lucky, you know, well, let me give you another example. If you put money on your bank account, on your savings, you're gonna be you know, the bank will be paying you 4.35% on whatever it's on your savings. So if you have $100,000 in the end of the year, it's not monthly, it's yearly, you're gonna receive 4.35%. But there's lots of, and you know, lots and lots of rules. You need to keep the money for a certain time. You need to put more money for certain, you know, it just depends bank by bank. But primarily, it's good if you're saving money, but if you want to borrow money, well, it's, to be honest, it's not that good if you're saving money as well, because when inflation is higher than interest rates, it doesn't matter. You're still losing for inflation. Your average dollar in cost would be negative because the inflation is higher than what they are paying. They're actually paying. So if you stay with your money doing anything, you're losing money at the same time. So always search for other options from fixed income. They're very safe. You will definitely know that these 99.9999999% that you will get 4.35% in the end of the year because it's the government, right? But now, if you want to get money from the bank, if you're lucky, you can get a 4.35%. But depending on your salary, depending on your career, depending on the business you work for, depending on what you want the money for, lots and lots of depending, you may get 7%, 5%, 6%, 17%. It just depends your age. So lots and lots of things. In Japan, you were getting a negative. So if you put the money on the savings account, you weren't getting anything. All right, you were getting negative. And then the same logic stands for if you want to borrow money from. All right. So they ended the negative interest rates policy. And they are the last economy in the world to abandon the negative rates. So the vote was 7-2 to eliminate the negative interest rates, setting the policy rate in the range between 0 to 0.1%. All right. Remember, guys, that interest rates are not a setting, like it's not a set number. It varies, all right, from whatever the Fed says. You can have a look on one day. Oh, we're going to set the interest rates between 5.30 to 5.35% because there is a variance as a market as well. They pay, all right? So there's always a variance. But anyways, so it was closer than a lot of people was expecting, with the policy board members Nakamura and Nagoshi was talking about on the media. All right. Now I have another image here as well that I want to show to you. Let me download it. Just a second. This one. Let me open it. Okay, cool. So additionally, guys, the bank has abandoned as well the yield curve control. Okay. So the BOJ, the Bank of Japan, will continue to purchase Japanese government bonds with a virtually the same amount before, but the purchase of electronic transfer funds, the ETF, and the REITs has apparently been cancelled. So also outlining the plan to phase out corporate debt that I will discuss in a moment right here. So a bit more technical here, but I will dive into it because I think it's important. So there is some changes in the monetary policy framework from March 2024. As recent data and anecdotal information have gradually shown that virtuous cycle between wages and prices has become more solid. The bank judged it. How they know that? Because wages have been up as well as CPI inflation have been up as well. So it came in sight that the price stability target of 2% would be achieved in a sustainable and stable manner toward the end of the projection period of the January 2024 Outlook report. It considers that its large-scale monetary easing measures have fulfilled their roles, including the negative interest rates policy and the yield curve control. With the price stability target, the bank will conduct monetary policy as appropriate, guiding the short-term interest rates as a primary policy tool in response to developments in economic activity and prices, as well as financial conditions from the perspective of sustainable and unstable achievements of the target. Given the current outlook for economic activity and prices, it anticipates that a commodity financial conditions will be maintained for the time being. So we can see that the short-term interest rates, uncollateralized overnight call rate, and we can see on the other side the long-term interest rates. So we came in from negative 0.1% to now a current balance of 0.1%, 0 to 0.1%. Okay, so that's the guideline for the market operations. And the long-term interest rates, we can see that before the upper bound for the 10-year Japanese government bond yields was at 1%. And now they exit from the yield curve control and they can go above 1%. Right, so that's the MPM, that's the monetary policy framework for March 2024 and onwards. Now, you know, in terms of how can I say that? In terms of a future guidance, right, the Bloomberg noticed that the bank isn't offering much. Okay, so it states that it will continue to monitor developments in the financial and currency markets and the impact on the Japan economic activity and prices. However, the previous promise of not hesitating to take additional easing measures if necessary has been removed. Okay, has been removed. So it doesn't look like they're looking to come back on this decision of another negative interest rates. Okay, so it feels like they're gonna go higher and higher on that. Now, that's pretty much it from Japan, and this is why occasionated all of these murmurs going around and everything. I do have some option prices, the 0 TDE of the future JPY, the 6J. It's called 6J. They were with an implied volatility of 22.14% annualized, and now it would, you know, basically corresponding with a implicit move of 1.38% on the expected decision from the board. After that, the volatility fall, and we already know, you know, if the volatility falls from one currency, it means that no one is looking to trade it, therefore it's going to be weaker. And this is what we had right here. Let me show you. And this is what we had right here, right? This big move up on USDJPY is because the Japanese yen was very weak. I know it's a very technical approach to it, but this is the only and easiest way I can actually come to talk to you. Now, do you guys have any questions regarding this? I'm going to look at the chat now. Is it possible that the move up was to take all the trades out who were already in short positions as the news got leaked? It's possible, but it's you know, if you were long here when you saw the news, that's good because it's leaked. Something it's leaked, it doesn't matter anymore. All right, let me just take some water here. Now, as I say, when it's leaked, it just doesn't matter anymore. And it just doesn't make sense for the market to actually vibrate it. Let's say, you know, you go for a gender reveal, and before that, the you know, the parents coming in and tell you, oh, it's going to be a boy. So everyone don't know, only you knows, and everyone will be cheering like, oh, what's going to be? What do you think is going to be, a boy, girl? You know, what do you think? You already know what's it. So you got the news leaked to you. When the actual news come up for the public, for everyone that it's present on the time, everyone will cheer because they don't know. But you already knew it. So for you, it's just, oh, okay, I knew it already. All right. So can you see the point where I'm getting to? It doesn't make the same effect that it would if it wasn't licked. That's pretty much where I want to get it. All right. So that's what that's the word I was trying to look for. Do you guys have any questions? Please put in the comments. No? Okay. So my opinion is that we will go to 151. Okay. 151 is the all-time high. Well, not all-time high. CHF-JPY analysis. Yes, I will do that. So not the all-time high, but the year-to-date high, if I'm not wrong. Let me have a look. Sorry, I misunderstood. Not the year-to-date high. The year-to-date high is at 151. Let's call 151, all right? So I think, does all these mean JPY is dead for the next few weeks? Yes, that means exactly that. It's a bit dead. I do think that this will be the case for JPY, okay, a continuation higher, reaching those levels and going to over there 155. Okay, I've mentioned that so many times. You guys have been to me. Oh yeah, you know I don't lie. If I get wrong, I tell you I got wrong. If I don't get it wrong, if I don't get it right, I tell you I got right. All right, that's how I work here. Anyways, any questions? No? Okay, cool. Now, do you think the S&P will lower its rates? I'm gonna do a video on that tomorrow, but I don't think they will. I don't think they will. I don't think they will. It's just not the appropriate time. I don't think they want to be the first ones. You know what I'm saying? I think everyone is waiting for the Fed to cut first, and then I know all the central banks say the same thing. We are an independently bank. We don't care about all this, but they do. Of course they do. Because they don't want to be the first. They have that ego. Oh, I don't want to. I'm fine. I don't want to. I don't want to cut first. Even though inflation has been declining, and they were the first one to come in on a controlled inflation, inflation under control, too early. All right. Now, euro dollar I've talked about already, looking to go lower. USDJPY I've talked about already. CHF JPY. Look, when we see this move happening here, you know, we had that was a take profit trade. Yeah. When we see these move happening here on CHF JPY, we see that, you know, last 3 months since 2024, JPY was pretty ranging, and then CHF lost a little bit of strength, and then now JPY lost strength. So most probably we will continue to see a higher JPY, higher CHF JPY, okay, towards these levels first, and then towards these levels second, 171 and 170. Okay, what do you see? CAD. CAD is being very strong because of the higher where's USDK? Oh, here. See, CAD has been very strong because of the oil prices. All right. So in my opinion, they will continue to have higher oil prices, unfortunately, because if we look to the oil prices, where is this? Yeah, we are at 81 right now. That's not good, guys. That's not good. All right, some tensions building up there. I actually didn't thought that would happen. So that's not good. Aussie CAD, same thing. Aussie CAD going down. I'm looking to short Aussie CAD because of the Canadian dollar is stronger, Australian dollar just with this RBA now, not good. not good. All right. CHF JPY, you've been buying these since 168. You are booming. That's a fantastic trade. Congratulations. There's one more thing I want to talk about that I forgot about it. Oh yeah, the commitments of traders. Yeah, let me show this to you all. Just a second, it's going to load. Commitments of trader. What's your trading strategy, Matthew? Share with us, man. Okay, guys, let's have a look here. So are we using the same link for Thursday? Wasn't it? Yes, we're always using the same link. US dollar. Well, from 31, negative 31.3% negative, we came to 14% negative. So, you know, very, very good. Very, very good for US dollar. Put analysis on USD CAD. I think we can take a short after a good consolidation and target 1,300 by the year end. Let me know your ideal. Okay. USD CAD. Hard to say, man. CAD negative 11 from negative 6.8%, so a bit of short positions in there. JPY, interesting. See, interesting how this is working. Still negative 22%, even though everyone was expecting a hike, banks will continue to short it because they knew it, and it's just how that works. New Zealand dollar 13.1% to 6.2%. CHF from 0 that before was positive now to negative 5.7%. Even though it's negative, depends what currency you're going to pair it to trade, all right? Just letting you know. From 1.3% to 0.5% on euro, that's continuation to falling. And the UK pound from 14.2% to 8.2%. All right. These are the numbers for the commitments of traders. So if you want to take a screenshot, you can. And if you have any questions regarding it, let me know. How to explain? Oh, that's all right then. That's okay. Per analysis on USD CAD, I think we can take a short after a good consolidation and target 1.3 by the year end. Let me know your idea. I don't have any idea on USD CAD. Because CAD feels like, I've mentioned about this target when we were here. So that was a good long position to have. But looking to short it, if your strategy, if your strategy says it, then that's really good. But I would be looking, in my opinion, to, trade up other currencies. There is a code for indices. I just don't have it. Sorry, man. You have to make your own then. I'm French. I speak bad English to explain this to you. Oh, that's all right then. No problem. What about EURUSD? Yeah, EURUSD EURUSD is a very consolidating Forex pair. So I don't trade EURUSD, unfortunately. So what time on Thursday? We're gonna be doing 8 to 9 p.m. on Sydney time on Thursday. So stay tuned. US dollar is getting stronger. Not a problem. So have all a good week ahead. I know it's Tuesday already, but keep on with the good trades you guys doing. That's fantastic. And if you have any questions, I'm more than welcome to help you. All right, guys, see you.